My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey guys and gals, welcome back. Today, very excited to interview our special guest, zooming in from not so sunny Florida today. If you've been around multifamily real estate investing, you definitely know the name Gino Barbaro. He is very, very well known, very accomplished real estate investor in his own right, best-selling author, runs a great podcast, The Jake and Gino Show, has a whole community, and helps a lot of people raise a lot of capital. So, Gino, welcome to the show. Great to have you.
I am a legend in my own mind, Dave. How you doing?
Hey, it's rubbing off on me too, man. I'm thinking you're pretty legendary, so you're doing a good job. So,
thank you,
Gino. To get things started, we're at the time we're recording this. We're still early days in 2026. What are you personally focused on right now in your business? So, what's the main focus these days?
For us, it's always been multifamily. Yeah. Jake and I started buying assets back in 2013 with our own capital, went through a period where we needed to syndicate, raising money, and then doing some kind of refi and rolls. To date, we have 1,900 units under ownership, our own capital. We were vertically integrated. We got about 100 team members. What I love about what we've been able to do is during that 21, 22, 23 period, it was pretty slow. It was slim pickings. And the reason why is we had a framework, the buy right, the operate right, and the exit. I've tweaked it a little bit because I think the exit portion is really important, and most investors don't understand that. So for me, I wanted to really, change up the framework, but we're still investing in multifamily. We're still looking for assets that may be a little bit newer in this part of the market cycle.
Okay.
But the framework and the ideas and the fundamentals for us are still there. It's just not as much deal flow, but Dave, over the last couple of months, there has been a lot of more deal activity going on. We actually closed the 31 unit back in December, and I foresee this year having much more deal flow, especially for people who have to sell. There's going to be, I think, a significant uptick in deal volume as compared to last year.
Well, that's what I was going to ask you, Gino, because a lot of people got themselves in hot water. They overpaid, and now interest rates and all the stuff that's that perfect storm that's coming to fruition. So is that what you're starting to see a lot more of, is people being forced to sell or kind of bank taking over properties? What are you starting to see?
It's interesting because when you talk to a real estate investor, I want to know if there's ever a real estate investor out there that hasn't lost money. I mean, the only one that I know of personally is my business partner, Jake Senziano. And the reason why he hasn't lost money is that I was the one who went out and lost money before I partnered with him. It's really,
he learned.
This is the honest truth. I mean, there was life before Jake. And then when we started partnering in 2013, we have not lost money on a real estate deal yet. It's because I went through the pain. I went through the short-term bridge. I went through the market cycle of, wow, no deal is better than a bad deal. I brought all of those learnings and all those principles to us. And I think what ended up happening in this last market cycle, you really can't blame the average investor. Money was cheap. It was so easy to raise money, and it's free money, basically, 2.5%, 3% interest rate. So of course you're going to overpay. You don't think of the consequences unless you've been through it once. And it's so frustrating to be sitting there going, how are these people making these deals work? Well, obviously now you see a lot of those aren't working. But the reality is it's challenging when you're going through it. And for us, we were just able to sit on the sidelines. We were able still to do some significant deal volume in 23 and 24. We did about $25 million in each of those years. Last year, we did about $14 million. So it dropped off last year. We only had 2 deals. But it was challenging. And I think people just got caught up in the euphoria. It's the same thing as what's going on with silver right now. I mean, every time I open up Facebook, I see what's going on with silver. You missed the boat, people. You should have bought it 5 years ago. If you're buying it now, just be very careful. It's going to be a bumpy ride. It's going to be what multifamily was in 2022. Just buckle up and understand that there is a market cycle when you're investing in real estate or any other asset.
Yeah, everybody's jumping in. That's the time to be cautious.
Yes.
So you guys have weathered the storm very, very nicely. Unfortunately, a lot of people haven't.
Mm-hmm.
So, and I know that you're very, very well connected with other people in the industry, Gino. So what do you see has changed the most in the last year, 2, 3 years when it comes to raising private capital?
That is a great question, because right now, if you're raising capital, you need to understand that you need to be very conservative with underwriting for rents. Rents in a lot of the metros are still flat, if not dropping. Even in our Knoxville metro, rents have gone up significantly over the last 5 years. But now we've got a little bit of an inventory glut, a lot of newer assets coming online. So if you're hearing brokers say, yeah, you're going to underwrite for 5 to 7% rent increase, just be careful. That may not be the case. Hey, 3 or 4 years out, that may be the case. But I think we need to work through this supply side problem. And a lot of the big markets have that. I think the second component, when you're underwriting deals, I want you to underwrite it in, per unit. Our expenses have just shot up, skyrocketed in the last 3 or 4 years. It costs us between $6,500 and $7,000 per unit to run a property, all in.
Wow.
That's expensive in Knoxville. We're talking about CapEx. But that's a significant number. Where was it a couple of years ago? It may have been $5,500. But when you look at property taxes, you look at insurance, you look at labor, you look at supplies, all of those numbers have gone up dramatically. Now, I think that
you're not even talking debt here. You're talking
no. Yeah. Exactly. So if you're looking at a deal, and a deal is giving you $900 in rent, from that perspective, $600 per month of that rent is going just to the expenses. You got $300 left for your mortgage. Now, if you're saying to yourself, well, I can raise the rents to 9 to 11, it's going to take you more time, because right now there's still a lot of concessions in the market. They're starting to burn off. So if I can rent the property for $1,200, but that guy is down the street giving it to me for $1,500, but he's giving me 2 months free, that $1,500 becomes $1,350, and I'm competing with a crappier product. So the newer product is going to get it. So just be very careful if you're doing that. And I think the other thing with the capital raising, people, let's get back to basics when it comes to raising capital. Let's really start looking at the individual you're raising capital from. As a parent, the most important thing that you can do with your child, and as a business leader, the most important thing that you can do is to create a connection with somebody. Gino, the dad, wants to solve. Well, Gino, the dad, should connect with that person first. And then once you have a connection, you solve. Now, what does that have to do with raising capital? Well, the very first thing you need to do is, it's a business. You need to understand, when you're raising money from somebody, you are literally taking money from them, money that they've worked hard for, money that they're scared about, money that they're not sure if they're getting it back. You need to create a connection with that person. You need to understand and explain to them what buy right is, what operate right is, what exit right is. And I'll give you a quick example. Back in 2018, we were at MM2. We had our live event in Nashville. It was 450 people. It was awesome. That's when we really started building our list. We started getting out there. We started building the brand. And I remember we were going through our very first syndication, and I had met a couple of gentlemen out there. And when we got back the following Friday at 5 o'clock, I got a phone call from somebody. Picked up the call, and he was just asking me questions. And he said, hey, Gino, I saw you at your MM2 event. I saw your family there. You were talking multifamily. Listen, you've got a deal. Talk to me about the deal. Now, I barely said 10 words about the deal. All this gentleman wanted to do was to see if I was real, to see if I knew what I was talking about. He didn't ask me about IRR. He didn't ask me about cap rates. He saw that I was a real person. He saw that I had experience. He saw that I had a track record. And I had connected with him without me even getting on a phone call. I had built the brand, and I had gotten out there, and he came to one of my events, and he saw. And from that conversation, all it was, I made him feel comfortable. And then I just talked to him about the deal for 30 seconds. And he's like, hey, listen, I'm in. That's how you raise capital. It's a long game, and you need to create that connection. But if you're going to create a connection, you better make sure that you know what the hell you're talking about. And you better make sure that you are a steward of that person's money. And they're just not raising money just to be able to raise money and put it in somebody's deal. You have to think that that capital is it's so elevated. It's not yours. It's somebody else's, and you are that steward. Yes, and you better know what you're doing with that. You better have experience. And if you don't, Dave, you better be partnering with somebody who does have the experience.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Yeah, good advice, Gino. So let me play devil's advocate for a second here, because I
Sure.
can hear people thinking, well, that's easy for Gino. He's got this huge platform. Him and Jake have built this huge audience. They're putting on MM2 events. What about little old me, little old syndicator, average Joe syndicator? I don't have a huge audience, so I don't have a huge platform. How do you recommend that in 2026 people make those connections with potential investors and LPs and partners? What do you see is working best for the little guy?
Well, that's the first problem that we have is when you consider yourself a little guy, you end up showing up as a little guy. And I know that because I was the pizza guy. And when I showed up as the pizza guy and is not the multifamily guy, we realize that right away. As humans with our brains, the way they're formed, we have three parts of our brain: the croc brain, the reptilian brain, the emotional brain, and then we have the neocortex or the frontal lobe, which is the more advanced brain. That croc brain picks up right away. If you're walking into a meeting and you have no energy and you're like, I've got this deal, number one, good luck raising capital. You need to start shifting your identity. And it took me a little while to do this. That's why it's very hard for people who are starting out to raise capital. You need to jump into this all the time. If you are selling a BMW and you're driving a Honda, I ain't buying that car from you. I'm not raising capital from somebody if they're not invested in the deal or if they're not invested in multifamily. You need to be all locked in. You need to come full. You're hunting bear. You need to come hunting bear. You need to be excited. You need to really be engaged. And it's not about the platform. That's what people always stop. When I started, we didn't have a platform on our first syndication, our first raise. We had friends and family. We were really dedicated to what we wanted to do. And we really got out there. We were fortunate that we started doing podcasts, but who was watching our podcast for 2 years? Friends and family. It was just going out there, showing people what we were doing and letting them know, hey, this is what we do. And then all of a sudden you have one person that starts investing and that person gets some kind of experience. They like you. They recommend you. So don't worry about you being smaller. That has nothing to do with it. That would stop the vast majority of people. What I would say is you have to start shifting that identity and saying, I'm the multifamily guy. I'm here to raise capital. I'm here to ultimately bring value. It's changing your paradigm. You're not raising capital from somebody. You need to put yourself in that other person's shoes. You need to say to yourself, what problem am I solving for that person? For me, when I started out, it was easier for me to raise capital from small business owners.
Right.
Unconsciously, I didn't know why, but now I know why.
You were one, right?
Yes, exactly. I knew their pain. I knew what their goals were. I could speak their language. I knew that pizza guy did not have time to go out and find multifamily, number one. He didn't have the expertise to do that. And he just wanted to build wealth. He knew that his little pizza shop was okay to pay the bills, but I got to invest my money somewhere else. And I don't like the stock market. So that's what resonated. So when I spoke to somebody, unconsciously, that's how I presented myself. And I attracted a lot of small business owners. And ironically enough, who showed up at MM events? A lot of small business owners, a lot of restaurant owners, a lot of pharmaceutical reps. That Jake was a pharmaceutical rep. So you start speaking their lingo and you start identifying, you put those two together and people will start following you and start listening to you.
Yeah. Good advice. So there were a lot of things people were trying in the heyday or doing in the heyday that were working pretty well for raising private capital. Might not be working as well these days. Have you noticed anything that people are still trying to do that they probably shouldn't, then they should switch modalities or switch approaches?
That is a very good question. I think people right now are trying to do email blasts. I think people are getting pissed off. I think they're completely overwhelmed with an email blast. There's one other thing that people should not be doing. If you have an opportunity and you haven't spoken to Dave in 2 years, don't shoot off an email to Dave or text to Dave saying, hey, Dave, I've got a deal. You need to be doing the work before the deal falls into your lap. That's the biggest thing that I see. And once again, put yourself in their shoes. I haven't spoken to Dave in 2 years. All of a sudden, Dave goes, Gino, I got this deal. You want to invest? I'm like, Dave, what are you trying to sell me? Like, really? You need to do that work. That's why it's a difficult business, because you need to be reaching out to the people. Even when you're talking to real estate brokers, are you only talking to brokers when they've got a deal? I mean, that's pretty short-sighted. You want to create a relationship with them. So then, you're having the conversation, you're letting them know, hey, by the way, and if you do that and you become top of mind, when an opportunity comes, you're not asking them. You've already, primed the pump, as they say.
Right.
A few years ago, that wasn't the case. Everyone had capital. Everyone was flush. It was like the silver rush of right now. Everyone wanted in. A lot less people want in right now. A lot more people are skeptical. That's why building the relationships and creating connection right now is more important, because there's a lot more skepticism around that water cooler where the LPs are hanging out.
So, Gino, knowing what you know now, I mean, you've been, like you mentioned, you've had a ton of experience, and you guys jumped into the whole podcasting thing early days, and things have kind of worked out. But let's say the rug got pulled from under you, everything's taken away. You have to start all over again from scratch with the raising capital side of things, and you've lost all of your existing connections. What would you do to get the ball rolling again, as quickly as possible?
This may sound, I guess, a little strange, but what I would do is I would hire a communication coach, a speaker coach, because I want to get better at creating stories and really connecting with people, because storytelling and communication is so important. No one's ever taught you that. When you watch these TED Talks, these people have gone through some massive training, some massive speaker training. That's the first thing I would do. The second thing I would do is probably pick up a book like Chris Voss's Never Split the Difference and really learn the negotiation aspect of it, really learn how to speak to people, learn how to connect, learn how to mirror other people, tactile empathy. All of the things that Chris talks about in that book is something that I think capital raisers need to do. So you've got communication on the one end. And why communication? Because you need to start going on podcasts. You need to start possibly even hosting your own podcast, or maybe a YouTube channel where you're getting uncomfortable, or an Instagram channel where you have some reels, because you want to get out there. You want to be top of mind. You want to be able to send people somewhere so they can start watching you and start connecting with you. So instead of it only being 1-to-1, which 1-to-1 is great, but maybe it's 1-to-3. And then, the next podcast may be 1-to-10. And if you can become an effective communicator, an effective speaker, it'll be so much easier for you to raise capital.
That's some of the best advice I've heard in a long time, Gino. And you're right, it is, I wouldn't say it's counterintuitive, but it's not the first thing anybody thinks of when it comes to raising capital. But you're absolutely right. I mean, if you can't communicate effectively, if you can't tell a good story, if you can't connect with people, they're not going to invest with you. And then starting your own channel, whatever that looks like, very, very smart. Cool stuff. So, Gino, as we're kind of wrapping up this conversation, because time flies when we're having fun, what's coming up for you and Jake in 2026? What exciting things do you see on the horizon for yourselves?
For us operationally, it's been really challenging for the last 6 months. What we've done, though, in the last couple of months, we've broken through. We've actually gotten rid of apartments.com. We're using Zillow for advertising, much better. We've been implementing AI through Appfolio. Appfolio's got their realm where we're using AI, where we're catching, the leases and the calls, which we weren't doing up until several months ago. Their platform wasn't strong enough. What happens is when a person calls into the office, if you don't get back to that client or that customer or that lead within 30 minutes, 70% chance of gone. What AI allows you to do is it allows you to see that touch point. It allows you to get it scheduled, and it allows the leasing agent to go in and go, oh, wow, we've had somebody. So it's a great way to track, leads and leases. And the other thing that we're focusing on is retention. 2 and 3 years ago, you really sort of didn't want to retain tenants at some point because rents were going up so dramatically. Although it would have been nice to retain them because you're trying to create community. The market cycle has shifted where now, hey, there should always be, in my opinion, that looking at and trying to retain your residents, because if you can retain residents, even a 10% bump, all of a sudden NOI goes up. You're building a community. There's less work for the property management team, less work on the maintenance team, the CapEx team. So I think our focus is on stronger leasing, advertising, utilizing AI, retention. And the following thing for us, one of the last things is we have CapEx teams out there. We're doing our own decking. We're doing our own siding. We're bringing a lot of that stuff have been in-house, and it's been able for us to save us a ton of money and really focusing on the aesthetics of our properties.
Nice. Yeah, those are some exciting initiatives that you got on the go. Gino, you guys are up to a gazillion different things. You got multiple different platforms. If people want to connect with you and find out more, what's the best way for them to get started?
Just go to jakeandgino.com. The podcasts are there. I've got a family company. It's barbaro360.com. If you want to check out the family, we bought a farm. We got a couple of podcasts on that platform as well. It's barbaro360.com and jakeandgino.com.
Gino, always a pleasure. Thank you so much for being on the show, and thanks for sharing what's working in 2026 when it comes to raising capital.
Thanks, Dave.
All right, everybody, take care, and we will see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.